Bitcoin volatility increases ahead of the monthly close. Where are the battle lines? We're going to identify those battle lines and a whole lot more in today's Bit Break analysis. Hey guys, it's Keith Allen. Glad to be back. It's been a little while. Sorry about that. Life has been busy. The market has been volatile. And I don't expect that volatility to let up anytime soon. Today, we're going to talk about some of the things that are affecting that volatility, kind of maybe helping fuel it a little bit as we approach the monthly close. And we'll, of course, look at the order book and order flow dynamics in FireCharts. We're going to look at the technicals and see where they line up. See if we can find confluence between where the technical analysis sits, those quote unquote battle lines on the chart for both price moving up or moving down. And I also want to talk about some mistakes that I think probably the most common mistakes that a lot of traders are making right now that are getting wrecked. And really, it's for me, there's probably nothing more frustrating than losing money in a bull trend. So going to identify what that is and hopefully help you avoid making those mistakes. Before we climb in, as usual, do me a favor if you haven't done so yet. Well, first of all, if you're new to the stream, thank you for joining me. My name's Keith Allen. I am a co-founder at Material Indicators. I am a work-from-home dad, and I trade just like you do. Well, maybe a little bit different. Maybe if I show you what I'm doing or what I'm watching, that will help you make some decisions. I am not going to tell you what to trade, how to trade, or where to buy and what to buy, but I'm going to show you what tools I'm using and how I'm making my decisions based on what I'm seeing in the analysis. And I will give you, of course, my perspective on the broader market. If you haven't done so yet, do me a favor and smash those buttons, hit that like, hit the share, and make sure you especially hit the subscribe button so you don't miss any of the future streams. Live chat is open as usual. I always enjoy engaging with you guys. If you are able to do so, by all means, if you have questions, I'll do my best to answer them. If you have comments or insights, please share them. We always enjoy sharing insights with each other, so that always is something that makes the streams good. If you're not able to watch or engage in the live stream or you're watching the recorded version of this, drop a comment and I will engage with that later today or this evening. I promise you. One little bit of housekeeping before we start. We have a phenomenal sale going on at Material Indicators, 30% off all the tools. Everything you're going to see today and then some. So if you have been following along for a while and you've been interested in getting FireCharts or maybe access to some of the data in the MI dashboard or maybe the indicators that are on TradingView, you can get it all at 30% off for a very limited time. Don't miss out on that opportunity as well. Okay, so let's go ahead and climb in. We're going to start. Let's start, I guess, on the Bitcoin chart, on the candle chart, and look at really what's coming into play right now, because we are having a bit of a pullback, right? So we're going to start on the candle chart here. I've got a daily chart opened up here, and we can have a look and kind of build on this analysis from here. We do have a pullback. Our all-time high now is at 112,000 even, and we're now hovering above 106,000 right now. Looks like the comments. I'm sorry. Mark, good to have you with me. He says, "Can't keep them on the edge of my seat." All right, mate. I'll do my best to make it worthwhile here. So what we can see here is that price has pulled back from this all-time high, and look what it's rolling up to here, the 21-day moving average. This is one that I follow a lot. I use what I call the key moving averages, the 21, the red 50, the blue 100, and the purple 200, which you see has beautiful confluence with the trend line. Now let's get some perspective on that trend line here. Okay, this is going back to September 2023, where we consolidated in this 25K range, 25 to 30K range, had a breakout from there, another consolidation level, broke out from there, another consolidation, broke out, consolidated for a long time, double bottom off of this trend line. And well, the rest is history, right? Trump pump began right here November 5th on election day. That was almost fully, not fully retraced, but heavily retraced down to a double bottom, which you can see right here. And so here we are off on a nice run from this. And at this point, this trend is in jeopardy, right? It's at least being tested here. So a couple of things that I have been watching develop here in the past few weeks here, right, is how we broke out from these levels. And the key things that I had been watching at the time were the 2025 Open. And remember that annual open is very, very important. The 2025 Open, and then the 100K level. And the 100K level initially was a psychological target, right? When we were down here in the 90s, it was a psychological target. Once it was broken, it was still a psychological target until we went back and engaged with that level. And we never really had a validated breakout, in my opinion. There were hints of a validated breakout here. You can see most of the candles engaged back with that 100K level where there were wicks below. That to me was a sign of weakness. We then saw 1, 2, 3, 4, 4 full candles above, looking like it was going to validate, and then a complete breakdown in December. Things broke down again. Again, another attempt. This was a failed attempt. There was no full candle bodies above to even give us a hint that this might be a strong attempt, and we saw a further breakdown. Again, each of these candles kept wicking below. Very few. Here's one single candle body above the 100K level, and then wicks below, et cetera, et cetera. Now, we started getting some full candles above, but it was lower highs at that point. And then it became lower lows. So there wasn't any real strength here. So the point being, we never really, in my opinion, had a clear validation of that 100K RS flip. And we can see it now, obviously broke down much bigger, threatened the trend line here for some time. And here's the double bottom we talked about. And then we started climbing out. So the breakdown in the yearly open was a concern, and reclaiming that, obviously a big deal. That was almost a 7% candle that pushed us back above that 2025 open. We retested it once, twice, 3 times, and then started building out of this, right? 1, 2, 3, then 4, 5 more wicks below. I questioned whether it was going to hold. And then obviously we got a boost, and I can't remember specifically what the tariff news was, but I believe we came back on that May 8th. Likely it was maybe the announcement of the deal with the UK, or maybe a rolling back of tariffs from somebody else. I don't remember which one it was, but that brings me to an interesting point. Tariffs have been a source of volatility for the market, right? When they were announced back in April, we had this, huge downside push. What was it, like April, like right around here, the very, very, very first week in April, we saw things start to degrade here. I think it was April 2nd was the first announcement, and it was a cascade from there. We double bottomed because everybody panicked on this news, and then he said, okay, we're going to have a 90-day negotiating period, et cetera. And then we started to climb back out. And since then, there has been just insane tariffs proposed on China, up to 145%. Then it was rolled back to 100%. Then it was rolled back to 30%. And now they're in another 90-day negotiating period on that. And the market responded to that. Then last week we saw a remark from Trump that the EU was going to get slapped with a 50% tariff. Now, if you still believe that these numbers are really going to stick, if you really believe that it is anything else but a negotiating tactic at this point, I don't know what to tell you. I mean, there's no way that those numbers are sustainable. It's just not happening. And so since then, Trump has been labeled what's been called the taco, right? Trump always chickens out. Well, he's not really chickening out. He never intended for the tariffs to be that high to begin with. It is just his negotiating strategy. I'm not saying it's a good one, but that's his strategy and it's how he operates. Whatever the case may be, this week, like as recently as yesterday, a trade court in New York has determined that most of Trump's across-the-board tariffs and the reciprocal tariffs are illegal, that he overstepped his authority to put those tariffs in place. And so obviously he's going to appeal that, but markets are, I think, happy to hear that. However, nobody's really settled yet because he's going to appeal it and he's going to find other ways to try and do this. I think the market is starting to get wise to the fact that these tariffs are a negotiating tactic. Which is why it shocks me that we still see knee-jerk reactions to every bit of tariff news. It's just like, you could take a page from Fed Chair Powell's playbook that you just have to wait and see and not to rush into any hasty decisions based on what you're seeing on tariffs, on these proposed tariffs, because the likelihood of them ending up at the numbers that were originally proposed are slim and none. And I commented on it on X when they came out. I said the same thing. I said these are not likely. That's not even my page. That's Fred's page. Let's go to our page. And I engaged with a bunch of others as well and said, not likely going to happen. We'll get to that in a second, and that. Where did I put that? Oh, here you go. Right. His threat to Apple, his threat to, he's Apple's gonna make iPhones in the U.S. Apple can't make iPhones in the U.S. for 25% more than they're being made right now. Okay, so it's cheaper for Apple to take a 25% tariff than it is for them to make phones in the U.S. So the chances of that happening are very slim. The chances of the European Union having a 50% tariff, not going to happen. And of course, he walked it. This didn't even make it through the weekend. We had a long holiday weekend. By Monday morning, he was already, or even Sunday, he had already made a deal with the EU to pause this for a while. And they're now negotiating, and they're best friends now. So it's all hot air. And it is all a negotiating tactic. Don't let it freak you out. Zoom out, as they say. Let's see. Did I post any of those on the Material Indicators channel? Probably the same, similar, kind of stuff. And a reminder, hey, we got this deal going on, 30% off. I told you about this at the top. There are links in the description if you want to take advantage of that discount. Head over to materialindicators.com. So let's go back to the charts here. So in terms of what I'm looking at here, lines in the sand, if you will. I've heard a lot of chatter about different things, including this 106K level. And I'm interested in this level for sure. 21-day moving average. This would be losing this trend. Obviously, holding this trend is very bullish. Losing this trend would be bearish in the short term, but I would say that it is premature to say if we lose this level, it's over. Because for me, the real line in the sand is this trend line, and if there was a secondary line in the sand, it would be that 2025 open. Now, I think that it is getting less and less likely that we go all the way back to that 2025 open. I did want to see a retest of support at 100K. But I felt like as the 21-day moving average got higher and higher and further away from that 100K level, that it was less likely that we could go there. Now, you can't rule anything out in crypto, not now, not ever. But let's take a look at liquidity in the order book and see how this stacks up with where these support levels are. Right, we have this 106K level. We have the 50-day up at the 97K level. And the 200-day and the trend line are around 94.7. All right. And then, of course, right down here, we have the 2025 open around 93.5K, 93.3 to be honest, if we're trying to be precise. So let's head over to FireCharts and take a look at what is what this looks like over here. I'm going to boost some of the contrast here. And the first thing I notice is we have a move that this actually just happened here. A block of liquidity has moved up from the 86K level up to the 93K, 93, 94K level. If we zoom in to get a little bit more granular, we can see that we have good support here at this 106K level. We have secondary support underneath it down to, I'd say 104K. Another block of support defending that 100K level, and of course more to 100K. But let's see where this new line went. Right, this moved up from down here. This 18 million, and 18 million may not sound like a lot, but it is enough. Historically, has been enough to make a difference in the order book. And make a difference in the trend. And so this has moved up literally right to right above that 2025 open. So in terms of the end of the trend, if you will, then I would say this is the macro line in the sand right here at this stage. We have seen price wick below, right? And you would want to see closes above. A wick below this doesn't end it, but a series of closes below it would end it, in my opinion. And so if we zoom out to the weekly time frame, see if that changes anything, we now have the 21-week moving average has confluence with this area again. So I'm really interested in this area as showing strong technical support. And I think if we lost that, then we could expect a much bigger drawdown. Now, why don't I think that's going to happen? And why am I not over trading this market? Which, incidentally, I talked about what I think is the number one thing, the number one mistake people are making in this market. I think the number one mistake people are making in this market right now is over trading. If you react to every bit of news, every dip, every spike, you're going to get wrecked. I mean, there are very few people in this world that are really, really good at timing the market that way. So if you can do it, hey, congratulations, more power to you. A lot of us can do it sometimes, but doing it consistently over time is very, very difficult. So if you're a short-term trader, then dial into shorter time frames, and you're increasing your risk, but there are certainly opportunities to make money in both directions in this market. If you are a longer-term investor and you believe that Bitcoin will someday indeed be worth more than $112,000 per Bitcoin, and I personally believe that, then maybe you back off the buttons a little bit and you look at these dips as opportunities. So what I'm looking for right now, to be honest with you, is a support test right here at 106K. And I am willing to add to my position right here if we can hold this. Now, where's that capital coming from? I'm mostly, my Bitcoin position is pretty well built, right? And I've been building it since back in 2022, since the FTX crash, just buying at these consolidation ranges. And this to me looks like we're coming off of another consolidation range. And is this going to hold as the next consolidation range? So so this looks like a potential opportunity to me. If we break down further and made it all the way down here, you're damn right I would be a buyer. If things hold here, for sure, I would add. So what I've been doing, as I said, I'm mostly a Bitcoin trader and or investor at this point, and uh, and I do trade a handful of alts, and I'm taking profits from those alts and I'm putting it into buying more Bitcoin. And so I have much more confidence in Bitcoin's long-term future than I do in alts, even though there may potentially be some greater upside potential out of alts in the near term. I'm looking for those opportunities on alts, but my main focus is how to make more money to buy more Bitcoin. And so I like this level right here, and the health of the short-term trend is relying on this level right here. If it breaks down, then 100K retest comes into focus for me. And if that breaks down, I'd be surprised if it breaks down. But if it does, we have heaps of technical support here. Now, I showed you this on the weekly time frame, and I want you to pay attention to the moving averages right here. The green is the 21, the red is the 50, the blue is the 100, and the purple is the 200 moving average. On the weekly time frame, they are all completely unwound and looking healthy. On the daily time frame, we're coming off of a series of death crosses, and now we're seeing golden crosses. Death crosses are when the moving averages wind, the lower moving averages cross below the higher moving averages. And the golden crosses are when those unwind and the lower moving averages are above the higher moving averages. And so we have golden cross the 21 with all three moving averages. First with the 50, and then almost simultaneously with the 200 and 100 that were very closely correlated here. And then more recently, the 50, the red 50 has unwound with the 200-day moving average. And what we have left here is to draw the blue 100-day moving average up above the purple 200-day moving average, and for this to also draw up above the trend line. So this to me is, while moving averages are indeed lagging indicators, this to me is an indication that the trend is moving in the right direction. The moving averages are unwinding, and price is going to eventually go up. So you can see right now, price is moving right in on this 21-day moving average. And will it hold? The 21 currently sits, at least on this exchange, at $106,191. We're less than $100 away from that right now. And whether we wick below this or not, it's all about the close. So I wouldn't rush here. If we lose this, I wouldn't panic sell. I would wait to see if we get a close here, back above this 21. So what we can do is look at FireCharts right now and see if we can get an idea of what's happening here with the order flow. As we see price moving into this 106K range, we've had a little bit of incremental buying here from whales, and then a little incremental selling, and that happens. It's part of the game, right? Profit taking happens. So let's watch and see if this strengthens. Right at the moment, 106K has just a little over 11 million in bid liquidity stacked on it, and so I'm watching this in real time with you to see if this gets broken, or if we see some liquidity replenish or stack in this in this range, if we see whales go for an all-out dump, or if we see them start buying as price gets lower and lower. So even if we shoot through this, there's a chance that we could wick down here and then rocket back up. And if not, then that 100K level comes into focus. So this is something I'm keying in on very, very closely here. Some other things to consider. I've heard some news about whales holding over 10,000 BTC have transitioned from accumulation to distribution because, and that assessment was based on the fact that they've moved significant portions back onto exchanges. Well, sometimes they do that for reasons other than to trade. Obviously, it's an indication that they're planning to sell, but it also could be an indication. We've also seen it used as a tactic, I should say, to fake out the market. So it's speculative to say that they've moved from accumulation to distribution until they actually do it. And if they are selling, profit taking at this level, there's nothing wrong with that. Nothing wrong with that at all, right? Unrealized gains are not profitable. So at some point you have to take profit and turn that in and recycle that into other things. So I would say that quote about that big movement back onto exchanges from large holders turning into an indication that distribution is happening. You got to see it happening more, right? And sure, we're seeing some selling here on the CVD in a low time frame, but one day does not make a trend, right? One data point does not make a trend. You got to zoom out and see what's happening over time. And yes, there has been some profit taking. You can see it here from brown whales and purple whales as well. There has been some profit taking, but they are still very much in the game, in my opinion. That could change, right? And we're watching to see if it does. But for the moment, look, buying red and purple and green with a little bit of buying, even yellow buying here right now. And look at this. This is cleared out. So it's now easier to move up. What did this have a minute ago? 10 million, 11 million. Now it's up to 12 million. Okay. So there is a little bit more bid liquidity coming into place here. And we'll see. We'll see how this plays out. These are the things that you get to see when you're looking at an order book and order flow data platform like FireCharts. Okay. This helped me because this shows me that hey, looks like this 106K might hold. If we go back to the candle chart, you can see it right here. So that's a perfect way to illustrate how you can use FireCharts to help you make some trading decisions, right? I talked you through this in real time, and this is doing exactly what we expected it to do. And we validated that by seeing it happen here in the order book and the order flow here on the bin CVD that showed us that buying was going to resume. We saw some strength come into that level. And for the moment, anyways, we're seeing what looks like a rebound. This could change, right? It could revert at any time, but that's why you have to keep monitoring this stuff. Something else I wanted to talk about. There's a Bitcoin conference actually going on right now, big Bitcoin conference going on. Those typically give us some volatility. Monthly closes typically give us volatility. Weekly closes give us volatility. And we have all of those things happening right now. Weekly close and monthly close coming up in a couple of days. Those are more reasons for volatility. And we will, of course, look for new signals out of trend precognition when we get to those events. Of course, we have a weekly coming up, and then the monthly. I think on the same day, right? Is Sunday the monthly close as well? So I'll be looking for a new signal from either the A2 algorithm up here from trend precognition or the A1 down here. And if we don't get a new signal, I'm going to be looking at this A1 slope line to see if it changes its trajectory. Will it continue in this downtrend? Will it stay on this trajectory, or will that trend or will that trajectory change? Will it tick down? Will it tick horizontal, or will it tick up and revert and show us a change of momentum on the monthly time frame? Weekly or monthly time frame for that matter. This is what the weekly looks like. On the monthly, we are trending upward, and if we cross this blue dashed line here in the middle, then we would get a new A1 signal. So that's something to watch for as well. we're just days away from this, guys. So definitely want to stay in tune. We've been on an uptrend for the month. It's obviously validated at this point. And if we could get another, if we could back this up with another, whether we get the A2 signal or not, if we got an A1 signal here, that would make me very, 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 very happy. And we'll see how things play out from there. So hope that's given you some insight as to what to be watching for in terms of lines in the sand. I told you that current moving average is kind of the short-term deal. The long-term macro deal is down here at the trend line, and potentially even the monthly open, the yearly open to the upside. I'm okay if it takes us a little time, a little more consolidation up here before we break this 112K. I think from here, we're in price discovery, so it is going to be probably those psychological $5,000 increments, 115K, 120K, 125K, 130K. And there will be dips and profit taking in between. But I think the next range target from here is really in that 120 to 130K range here. It's the measured move off of the cup and handle that has taken years to develop. And then we go to the fib extensions from there. So this measured move takes us to 122 and change. And then we have the 1.618 right above it at 130. These are all valid, viable targets, in my opinion. If momentum continues from there, then I'd look to the next fib extension at 165K and so on and so forth until we get back to this lifetime channel up at the moment, which is at where? That would be up. I can't even see it. If we can make it back into this lifetime channel, that gets us, and depending on when that happens, right, changes a lot. At the moment, it's sitting at 167K. If it took months and months and months, or even years for that matter, right, the longer we go, the higher that trend line sits. If we could make it back up into this channel, that would, in my opinion, really accelerate where Bitcoin price goes from here. Hope that gives you a few things to marinate on, guys. In the meantime, I'm going to wrap this thing up. I'm going to leave you with a parting shot of the order book here. And I'm even going to zoom out a little bit so we can get a feel for where liquidity is moving. You can see more stacking in above 100K and to the upside between 100K and 112, the current all-time high. There's a little bit more ask liquidity coming into that range as well. So I don't think we're going to break this so fast, but I think that the fundamental news on Bitcoin for the macro outlook is as positive as it's ever been. And we just have to be patient. In the meantime, look for your opportunities, make data-based decisions instead of hopium-based speculative decisions, and stop over trading. Simple as that. It's not all about just making money and making great trades. Part of having longevity in this market as a trader is to minimize your losses. Stop over trading and you will minimize your losses. Here's to trading smarter, my friends. Have a great day.